Good morning. My name is Tim Gregory from Vermeer Investment Management, and I'm here to talk to you this morning about global equities and why we've had such a strong rally in the first quarter, which has been much against the expectations of many investors, given that we finished 2018 with a very poor period, which ended with the Christmas Eve capitulation, when investors were fearing that 2019 could bring in a recession and led to a very, very weak quarter indeed for equities. What's happened since then, in my view, is that two major things have changed sentiment towards markets. First of all, the Federal Reserve, which was largely expected to continue rising interest rates in 2019, has moved that policy to on hold and indeed ended their program of quantitative tightening. This has completely changed the perspective for investors of whether the Fed continues to be accommodative in its stance towards investors and has really helped improve sentiment and caught many people out. In addition, there was significant pessimism with respect to the trade talks in the latter part of 2018, and many people feared this was going to push the economy into a global recession, and certainly had impacted the Asian economy and the European manufacturing economy very strongly as we moved towards the end of that year, and has continued to do so as that uncertainty has persisted in 2019. However, there's considerable optimism now that President Trump and President Xi of China will be able to construct a deal that may even remove the tariffs that have been put in place and certainly allow those countries to continue to trade and hopefully bring forward an economic recovery and a continuation of the growth that we've seen in recent years. Despite this, stocks have worried less about the outcome of the trade talks and focused purely on the revival that we've seen in markets and the hope that the trade talks will actually end in a positive way. And so what's happened now is that stocks have pretty much got back all that they lost in the latter part of last year. And so now, how do we see the market moving forward? The question is, can markets push into new high territory, or will they fail here, or will we enter a period of consolidation? My view is probably that the latter is most likely. There's plenty of room for optimism given now that interest rates are on hold. There's been a little bit of better economic data out of China this morning, which is very encouraging. And in many cases, valuations are not too stretched for the markets as a whole. Clearly, there are pockets of the market that have moved up very highly, and therefore will have to tread carefully as we move into the results season. And I think it's the results season that will prove pivotal to many stocks as we go through that period, which starts again quite shortly, with the banks providing the first indications of results for markets in the latter part of next week. And then we'll move through many of the industrial and technology companies that are also pivotal to markets going forward. So lots of opportunities to look for in markets going ahead. A lot of companies that will need to justify the very strong recovery that we've seen from their share price in recent months, and indeed a number of companies who would like to continue to demonstrate the quality of earnings growth and momentum that they're continuing to show, that's seen their shares move to very high PE ratios in recent months. We expect the market to continue to reward companies, the results and consistency, and may also start to reward some of the companies perhaps in more value-oriented areas that have performed less well because of macroeconomic concerns. One area that might be the case for could be the oil industry, where some of the integrated oil companies offer excellent dividend yields and have really reduced their cash flow break-evens by very careful reining in of capital expenditure and strong control of costs to reflect the lower oil price environment. If those companies can continue to demonstrate that they're delivering very good cash flow, those company shares could be rewarded in the near future. Thank you very much indeed for your time.